Okay, let's see. Usually takes it a couple minutes to go live. All right. Hey everyone, and thanks for jumping back into the cryptoverse. Today we are doing DCA live again. In this one, we're going to be talking about a lot of different things, but we really want to focus in mostly on Bitcoin and talk about how the overall markets are sort of going right now. Not only in Bitcoin, but also by association, more risk on assets like equities and whatnot. So if you're not familiar with this show, we do it every Friday. We just sort of rotate whose channel we're doing it on. And of course, this week we are doing it on my channel. We have two very special guests. We have Rob, who runs the Digital Asset News, and James from Invest Answers. And both of their channels are linked down in the description below. So if you guys want to follow them throughout the week or see future DCA lives, just remember we rotate where we do those every single Friday. So it's great to have you here, guys. How are you guys doing this week?
Better than the markets are.
So we'll do a very brief overview of the questions that we're going to be asking, and then we'll systematically run through all of those. And then at the end, we will field questions from all of you guys. So the first thing we're going to talk about, do you think Bitcoin's going to put in a lower low? Obviously, we've been still stepping up into higher low, higher low, higher low. What do you think about that? Do you think it's going to hold, or will it roll over and put in a lower low? Potentially retesting, the summer 2021 lows. That'll be the first question. The second question is going to be about the Bitcoin dominance. It's always an interesting topic, and it's surprising to me because despite everything that's happened in the market over the last year, Bitcoin dominance has basically been the same. It's moved up a little, it's moved down a little, but we've more or less been 41, 42% plus or minus a few percent on either side. And the question then will be, where do you think we're going to be in a year? Do you think it's more likely that the dominance is at 50 to 60%? Or do you think it's more likely the dominance is at 20 to 30%? The third question will be about broader markets. We know they've been remaining risk off for a while. So what do you think? What do you think would need to happen for us to go back to risk on? What would be some signs of that? The fourth question will be, what do you think about the Nasdaq and the S&P? They've also been not showing the most amount of strength recently, also getting rejected off their 200-day SMA, just like Bitcoin. So what do you think there, though? Because they do tend to be less volatile than Bitcoin until Netflix. I don't know, there's some things that make it seem like Bitcoin sort of protecting our downside volatility with some of the way some of these equities have gone recently. And then number 5 will be, how far do you think the Fed will go before they reverse course and we shift back the other way? So those are the questions. We're going to go through them. James, I'm going to start with you on question number 1. So basically the idea is Bitcoin has been putting in higher lows. Even if you go all the way back to the summer of 2021, we bottomed at like 28, 29K, just below 29K. And then in January, I think we went down to like 33K. And then like a few weeks later, we were at 34K. And then a few weeks later, like 37, 38. Now we're currently at around 39 to 40K. What do you think? You think this trend line is going to hold? Do you think we put in a lower low? And furthermore, even if you don't think we put in a lower low, assuming we do put in a lower low, how low do you think that low could be?
Interesting one. Before I jump into that question, I wanted to retweet the video, but I didn't see it on your channel. Are we live?
Let me tweet it.
Nobody pops up live.
Yeah. DCA live. All right, I put it out on Twitter, so it should be there.
Awesome. Cool. So I'll assume we're live. We'll jump in. And so first of all, yeah, higher lows were the order of the day. The only thing that concerns me is if we hit the March 14th low. I know it's quite recent, but if we go back to that 37K level, then all bets are off with the higher low thesis. If we go back a little short-term trip down memory lane, I think it was January 23rd, 33K, then 35K, on the February 23rd, like exactly a month later, 37K in March. That 37K is going to be critical as far as I'm concerned. But just looking at the money that's buying and the money that's waiting to buy, I know people are sick of hearing this. I think the bottom, the amount we can retrace is very, very limited. but it's anyone's guess. Now, the easy way that I like to structure this, and the reason I am not nervous and I'm very calm, it's anyone's guess if there is a big wick down, but it'll be very short lived because there's too much buying pressure. Now, what I do reckon though is over the next 8 years, Bitcoin will do a 24x, just like Tesla will do at least a 10x. And that's what people need to be thinking about is, forget this short term noise, but think about the opportunity of where this whole area is going, barring any unforeseen circumstances. That's the way I look at it. So, I'm a buyer at 39K, and I'll be a buyer at 37K. I'll be a buyer much heavier at 35K. That'll be like chips on the table type of move,
Right.
just like I was for me on January 23rd.
Right. Yeah. I
That's
mean,
my take.
I remember that because that was the war, right? Like that was when.
That was Feb 23rd.
Oh,
January
okay.
23rd was when Bitcoin wicked down and then MicroStrategy was selling for $320. And that's why I went absolutely ape on
Right,
MicroStrategy.
but I also remember we did a show and it was like on the war in February when they on the invasion day you said you were buying. And I think
Yep.
Bitcoin that was on the wick to 34K, so it was like 1K
Yeah.
higher than it had the month before. And
So,
that, it worked out
yeah,
really well.
I was buying proxies on the 23rd of January for Bitcoin, and I was buying alts on the 23rd of Feb, and then equities on the 24th of Feb, which when the stock market opened the next day. It's kind of funny. You got to wait 10 or 12 hours before you can actually place a buy order on equities, but you can trade crypto 24/7. It still stuns me how we're operating like that in the traditional equity markets.
Yeah, it is kind of crazy to think about. Rob, what do you think? I mean, you think the trend line hold? I mean, again, I mean, obviously the trend lines are dubious at best, but just in general, like, do you think the higher lows are going to hold, or do you think we're going to go put in a lower low? Because structurally, I think that would have an impact on how some people might view the market.
So, like, we all know that in time in the market is more important than timing, right? So if we look forward, everything should be calm and everybody should take solace in that fact. The problem is that it's very hard to do with investors. So like for me, when I see Bitcoin come down and just, test that support and then test the support and test the support, to me it's kind of like a layer of ice. Every time you tap on that support level, it seems to kind of like break down just a little bit and a little bit more, a little bit more. And I think it goes into the mentality of the trader, whoever those people are. I'm just kidding. It's mostly James and a bunch of other people. They look at that and they go, you know what? This is the time to do my action, do the big trades. For me, when I see this, I see it going below 39, 38, 37, especially with all the talk that's going on in the macro environment. However, and we're going to get into this later, where else are you going to put your money? I can't put in real estate anymore. Real estate's overindulged. I can't put into equities. It's ridiculous because I think it's going to go down. So as I see it could go down to around, in all honesty, around 30K. And that's me being very bearish. Sorry. Oops,
No, I mean, I think that's, I mean, like people appreciate, I think, an unbiased view, right? Where you just kind of say what you think. You're not afraid to say it. Yeah, I mean, I
very
think you hit the nail on
unpopular.
the head,
That's
right? I
okay.
mean, if equities go down, it's hard to imagine crypto not at least kind of holding their hand for a little while and going down with them. So it's probably where to watch. And yeah, I mean, everything is kind of elevated at the moment, but it's been that way for a long time. So, um,
See?
yeah. So the next question is actually related to the Bitcoin dominance, and I'm always fascinated by the Bitcoin dominance, and this is something I spend a lot of time thinking about. And where is the health of the market? Obviously, when we're in crazy bull markets, after Bitcoin goes parabolic, we see altcoins just like surge, and they just they eat away at the Bitcoin dominance. We also know that historically, anyways, in bear markets, we've seen the Bitcoin dominance go up, right? So I guess my question is, we've been chilling at 42% plus or minus a couple percent on either side for what, a year or something. I mean, we've been putting in some lower highs though. Where do you guys see the Bitcoin dominance, let's say a year from today, so April 2023? Do you think we're going to be higher or lower? So, do you think it's more likely that the dominance is, say, above 50%, or do you think it's more likely to be below 30%? Or do you think it's just going to be the exact same as it is this year, the same, just kind of going sideways for a long time? Rob, I'm going to start with you on this one.
Yeah, so like there's a great website, Statista, and it takes a look at Bitcoin market dominance from 2013 to 2022. I'm looking at it right now. And you can just tell that when the market goes bonkers, when everything just starts to, just get incredibly overvaluated, Bitcoin dominance goes down because people want to get into altcoins. They get into altcoins, and then of course the market crashes. And where do people go? In the most safest assets in the most unstable asset class. I mean, besides Netflix, right? So if we see 2017, and we were at, before that it was always like 90s, 80% as far as Bitcoin dominance. The first one where it dropped off, June 2017. Big altcoin dominance was 60%. Bitcoin dominance was 39%. Then it kind of went a little haywire, dropped down. And then over here, as we see it again, like right now, when there was a big push in 2020, 2021 in the end, you saw Bitcoin dominance at 68%, altcoin 31, and it dropped down because the market was going so well, people get into altcoins. Now it bounces back. So like right now, and this is the same thesis a lot of the Bitcoin maxes will talk about. They'll say, you are getting punished. This is essentially what they're saying. You're getting punished for getting into altcoins. They call them S coins, right?
Right.
So if you do that, then just be prepared for it to go the other way. And of course, when you see the market go down, where do people go to? Bitcoin and to Ethereum. As time goes on, I think we're going to go sideways, especially with what Jerome Powell kind of doing the idea of Volcker, as far as the past president of the Fed Reserve. He's going to push those rates. And that's going to cause us to either go down or just chop sideways for a while. But next year, maybe it could be a little bit higher. It all depends, to me personally, on where the markets, equities go, and if we go from risk on versus risk off. So maybe in a year from now, we would see a little bit less Bitcoin dominance. But right now, I think it's going to go up as we see more volatility.
Great answer. So short term, you think it might go up. Long term, yeah, I would agree, because on a macro perspective, the dominance seems to just be trending down with time, as more and more assets come in crypto and they're fighting for market share. James, what do you think? A year from now, dominance higher or lower?
I think, well, it's a little bit of backdrop as to what I'm thinking about dominance is one, I think sometimes when you isolate assets in different categories or bundle them all together, it can be a bad idea. I don't think Bitcoin belongs with altcoins. So the whole thesis of dominance doesn't really matter. But we have historically ranged between that 39% and 48%. Now, I think Bitcoin could go as low as 35 because you're asking for how low we could go. But the problem we have is, it takes 5 seconds to flip up a cryptocurrency. It was 18,500 of them now. 99.9% of them are complete garbage. But retail investors, they're still memeing. They're getting into these meme tokens. They're aping in, degenning into all this weird stuff. But on the other side of that, though, you do have real stuff, real layer ones that are showing their value. Just look at the market cap of stable coins hitting 10% of the crypto market cap, with massive value of nearly $200 billion. That's a force to be reckoned with. So I'm extremely bullish on all things DeFi. There are also, when you look at some of the L1s today or over the last couple of days with extreme Bitcoin weakness, they're holding up really well. Like the Sol to Bitcoin is up 26% over the last 4 or 5 weeks. Luna's a beast. Curve is on fire. Matic is strong today. So it all depends on what is hot at the particular moment in time. Dominance could dip down to 39. I haven't seen it below 39 in quite some time. But I'm not too concerned about it at all. I just think they're different assets. It's like comparing car manufacturers to healthcare companies.
Okay, so you just think the dominance is somewhat irrelevant, so you don't really
exactly.
Okay.
It is interesting. Like, for example, a down market like today, you see weakness in big things like Bitcoin and some tech stocks, but then you see other names like L1s up 3%, 13% even. So it just depends on the day. It is an interesting indicator. I do look at it, but I don't. It's very good as a macro indicator whether to pair trade in and out of Bitcoin, for example, or Ethereum to other L1s. That's why sure. I find it kind of helpful, but that's as far as it goes.
Okay, fair enough. So, I think it's always, one of the things we've talked about before, right? Risk on, risk off, and, markets across the board have remained relatively risk off for the last several months. We were watching the dollar continue to gain strength. Obviously, it's just gaining strength against a basket of other things that are also going to trend to zero. So it's not like it means necessarily that much. But given the fact, or given the interpretation, I guess, of us being in a risk-off phase, if you agree with that, then what are some signs you would be looking for us to go back risk on? And when I say risk on, I don't mean, like a pathetic little bunny hill to take us back to 43K and then to just come back down the following day, right? I'm talking about like, hey, we're going to start building out support, holding levels, and then really starting to push higher. What are some indicators that you're going to look for that? And James, we'll start with you first on this one.
Yeah, my response is going to sound like a broken record here. It's a little bit like what I just said before. You got to look at the broad market is made up of a fraction of winners and a ton of zombies, a ton of companies that are ripe for disruption. Look at the car manufacturing industry. Look at the financial services industry. They are just all like over the next 3 to 5 years, 8 years at most, they're going to be completely shellacked by emerging competitors. And the S&P 500 is made up of 12% financial services, 14% healthcare, et cetera, et cetera. So I think you need to pick out the winners that despite interest rates, companies with no debt, Tesla, for example, despite recession, companies that are backordered over a year for cars, you're not going to lose. They're still going to go up. And that's where you need to be in this market. I think looking at, again, the broad market as a whole is meaningless. You got to identify the winners within that broad market. Now, good names with really good earnings will get dragged down in the downdraft. We see that with Google and Amazon today. Google's under 2,500, I think. Amazon's getting smashed too. But when their earnings come out, they'll rebound. And also don't think in terms of short term, this is the time to accumulate like Google at $2,400 with the 20-for-1 stock split coming. It's very much a no-brainer in my opinion. But yeah, you just got to segment out the market. In terms of going risk on, again, I have my limit prices for certain assets to buy at certain prices like Google, $2,400. I buy more. Amazon, can't remember what it is, under $2,550. I buy more. Tesla, anywhere at $850 to $750, I buy more. And that's what I just wait for. I wait for the things to come to me, and then I just buy them and, swing trade them long term.
Yeah, I mean, Tesla has been, it seems like every time it goes down to those levels, it just bounces right back up. And I think it has been putting in, cheap. Yeah, it has been putting in lower highs. I keep waiting to see if it can break out of this like trend that it's been in. But they recently posted some good earnings, and I saw them go up at least in the short term, and then the whole market then dumped the following day. So, Rob, what do you think? Is there anything specific you're looking for to go back risk on? I know we've talked about you're not necessarily going to be putting things into real estate because it's really high, right? And you said, well, equities are also kind of high, and if everything is kind of high, and you have, let's suppose you have cash on hand, right? What are you looking for to deploy that cash?
It's interesting because the way that we invest is different for all of us. I think that's as people are listening to this video, there's some traders out there, and there's some long-term holders, and there's some investors, and there's some people in the middle. So I think when we talk about these things, it's important to recognize the different types of strategies that you have. Like James has been trading for decades now, so he can get in and get out, kind of like a speedboat. And then for me, I'm kind of more of a long-term investor. However, right now, I see some big opportunities in some upcoming projects, and that's why I made this second channel. But this market it's an odd thing. You try to pick the winners and look for the fastest horses, but here's a prime example. Coinbase just launched their NFT projects, or be able to buy NFTs on Coinbase. And who did they pick to really circumvent or do all those things? Was 0x. And 0x increased by 53%. Whoever would have thought that? Now that I think might continue to go up. But however, it's one of those things where you look for these winners, but how do you do it? So me personally, right now, if you want to just sit back, dollar cost average or something, that's fine, but it's going to be a long time. I try to look at also be a little bit more risky. And this is where we have a dichotomy or a bifurcation of where we go. So on my channel, I talk about these new projects that are just coming out that are not even listed yet. And I think that's a good place for me, not you, whoever is listening, to put 5% and get into some. That's why I called that channel Digital Asset News DGen, because it's very new stuff and just coming out. So that for me is where I'm putting it, and I continue to dollar cost average. And also, real quick, I do look at Ben's website all the time for that risk assessment. And I'm looking for the 0.2 levels where I can really increase my DCA. And if you don't know what that is, check out Ben's channel. I look at it every day.
What's the name of your other channel?
Digital Asset News DGen. And we just talked about, I mean, we had 3 projects. One was Genso Kishi that wasn't even listed because I told people there's a ton of Asian, it was already a project that already had millions of people already into it. And then they went into crypto. And it was 0.0, it was a penny when we got into it. Now it's over $1. Then we took it Everdome. It was 0.015. It was a metaverse play. And because it had a good community and they were working with MetaHero, it went from 0.015 to like a nickel in like 2 or 3 weeks. The next one we're talking about is Fame MMA, which is a European Union MMA outfit, which they have influencers, which are like YouTube stars and TikTokers and ex-UFC fighters. They fight in the cage, and in their contract, they're going to bring forth this Fame MMA token, and they have to actually promote it. And they're going to use that for discounts on pay-per-view, NFTs, staking, play to earn, everything else as they branch out globally. So this one hasn't even been listed yet. And these are
I want some of that, Rob. Give me 10,000.
Well, be prepared to lose. Be prepared to lose everything. That's all I'll just tell you. Just kiss that money goodbye, because who knows?
Well, I mean, the last few months we've just been watching things go down anyways. So.
Ben, you said it right. You go, hey, let's all just lose money together.
That's what at least I was like, at least if we're losing money, at least we're losing money together here, right? So the next question, and Rob, I'm gonna go for. I'd like to switch back. Rob, I'm gonna go to you on first on this one. So, equities are. I mean, you just talked a little bit about DGen crypto, so let's shift it back over to some equity stuff. I want to know, what are your thoughts on the Nasdaq? What are your thoughts on the S&P? Because I don't think anyone here likes to admit that necessarily Bitcoin has been correlated to the Nasdaq over the last few months. But I mean, you overlay their charts, and they've basically done the exact same thing. When Bitcoin's going up, you generally see the Nasdaq going up, but the reverse seems to also be true. So the question is, do you think the stock market will hold these levels? I mean, it looks kind of scary with us kind of coming back down yet again. But what do you think? You think we hold, or you think we put in a lower low with the stock market and the S&P?
So if Netflix had a pretty brutal run there for a very short amount of time. I think it's only going to go farther. I think we've got Amazon and Microsoft next week for their earnings reports. So if those guys can't hold and show some strength, prepare for that. Prepare for the market just to take a big, we'll just say dip, just to be cautious. But then also, we were doing this. I did this video today, and I talked about bots. We all know that there's trading bots out there, and the video was a CMB Squawk Box, and the gentleman that was talking, I forgot his name, but he talked about how they asked him, like, why is the market going down? Because this should already be priced in, because Jerome Powell was speaking at the Volcker Institute yesterday. And he said, look, he goes, there's 2 things. First of all, the market is irrational, and that is the truth. And then also, you got to understand that there's a lot of these bots that use text script. They feed that into their algorithm, and they trade on that. And then that part's that in moving forward creates a cascading effect. And then of course more people sell, and then more sellers or more people who are in trading are like, wow, things are going down, and it just keeps going down. He goes, so the more times that Powell gets out there and speaks, and he's going to speak again about this in next month when they have the actual meeting, he's going to keep saying, look, 0.5, 0.25, whatever it is. And every single time, I think those bots are going to do it. Now, you could, if you're a trader, you might look at that and go, you know what, that's a strategy. I'm just going to do that in short or whatever you're going to do. I don't do that. But I can just see how like equities are going to keep going down, because that's one of the tools that the Fed has. Can they keep doing it before it crashes the economy? I don't know, because there's a difference between the stock market and the economy. And that's what I see.
And I think one thing to note too is that the stock, at least in my experience, you guys have more experience than me, but I feel like from what I've seen, the stock market tends to recover before the economy recovers, because investors are already pricing things in ahead of time. So then once you sort of see the recovery coming, the stock market will kind of go ahead and start to recover beforehand. I mean, James, I know it is somewhat of a redundant question, because we already talked about it a little bit earlier, but just, what are your thoughts on these stocks and whatnot? I mean, you already mentioned Tesla and Amazon and some of these other ones. You think they're likely going to be putting in lower lows? And if you're looking at the market right now, and I mean, you've done a pretty good job of timing local bottoms in 2022 so far. So what stocks are you really watching right now to get good deals on?
So Shopify is super cheap, but I kind of have three major holdings of equities. They are first and foremost Tesla, like my Bitcoin bag and Tesla bag are now the same size. And then I have kind of ETH would be parallel with Google, same size. So I like play both sides of the fence. And then I have my a big MicroStrategy position as well, which makes up part of my Bitcoin position. And then I have a little Amazon position, which would probably be equivalent size to my Solana position. So they're kind of the big three. And then I dabble in speculative assets, things like Shopify, Trade Desk, those types of things. So a lot of things are looking very, very cheap right now, but I'm just waiting for things to capitulate. We just saw the S&P turn around right now, but the problem is it's earnings season. The traditional zombie crap companies, the Verizons, American Expresses, healthcare companies are dumping because they have really bad results. And that's going to drag down the whole PE ratio because the market was a little bit bubbly right now. So it's bringing everything back to the norm before we rally the next leg up. But the overall trajectory is up for the S&P 500 because if it doesn't go up at least 20% every year, it's losing money against loss of purchasing power because of inflation and money printing. And that's the big macro backdrop we all need to consider as well. So, and then a lot of people are believing that, inflation is close to peaking. But as far as I'm concerned, we're nowhere near peaking because we haven't seen the true wage inflation yet. We haven't seen the energy inflation and the impact of energy inflation, things like food, and then the fertilizer loss because of interruptions in supply chain and Ukraine and everything else. That this is just going to be really bad for the next couple of quarters. And, it's going to be a rocky year. It's going to be a tough year. We knew that. And then the Fed putting half a point on the table is just dumbest thing how the markets reacted yesterday and today. It's like, we knew that. Everybody knew that. Everybody was 86% certain that was going to happen on May 3rd. And then maybe Rob's right. The bots are in control because the sentiment is silly. So things are, buy the rumor, sell the news, or vice versa. We're seeing happening in plain sight right now.
Yeah, it is interesting how markets tend to keep reacting to what the Fed is saying. When especially it already seems like a lot of that stuff is priced in. I mean, I think it's clear that the markets are probably going to continue reacting to this stuff for a decent part of 2022. I could see it happening for the next couple of quarters for sure. So then it leads us to the last question before we take questions later. And basically the question, and I'll go to James first on this one, is we see the Fed, we see what they're doing, right? They're raising interest rates. We know they want to to combat inflation. Clearly, raising it 0.25% or something it shouldn't really make a huge difference anyways, but they got to save face. So my question though is how far do you think they can take it before they really start to say, all right, maybe we need to reverse course? Because we go through these cycles, right, where they hike rates, then they let them level off, and they kind of come back down. What do you see as a general timeline for that? Do you think by 2023 we'll start to see them roll back the other way, especially if inflation is coming back down a little bit? What do you think with regards to the Fed? And then, what would happen if they pushed it too far? I think that's what a lot of people are worried about. Will the Fed send us into a recession and kind of forego the soft landing?
Yeah, well, I'm personally very fascinated about this and have been for decades, but never have I seen such violent movements in this. So it all goes back to the whole debt to GDP ratio. We're running at about 130% right now. And for every quarter basis point they increase interest rates, the interest rate they pay on the debt now is about an average of 1.68%. If they add 25 basis points, it goes to 1.93%. That has an impact of reducing GDP growth by about 0.3, 0.4%, and on and on. So every time they jack rates, like 50 basis points will cost an additional, I think, $570 billion in debt servicing cost. 75 basis points, $660, 100 basis points, $750 billion. this is what they know, but they're not telling you. Because I know if I know this, they've got to know this. They know, as I call, shooting themselves in the foot every time they jack the rates. They're just exploding the debt, increasing their ability to control growth in the economy, their lack of ability to control growth in the economy, and they'll increase unemployment. And his mandate, he said many times, Jerome Powell, first and foremost, max unemployment. Second, control inflation. Now it's control inflation because the building's burning down, but there's only so far they can go. So that's my whole thesis. And we can share this model one day in the future, but it'll be interesting to dig into and see what they can do. And if they do increase the rates, it can only be temporary, or else they got to print a truckload more money to service the debt that they have increased. It's a spiral of debt, and the ending is not good.
Yeah.
Right.
Sorry for the doom and gloom.
No, I mean,
But it just means prices will go up. That's all. Which means asset prices, hard asset prices like real estate, stocks, Bitcoin will go up.
Right. I mean, they kind of have to at some point because there's just so much more money circulating around. So where do you put the money, right? You put it in asset. Rob, what do you think? I mean, where do you think where does this end with the Fed? I mean, obviously we've seen the markets react every single time. Gets kind of old after a while, you know. So what do you think's the end game here with the Fed in terms of raising interest rates, and where do you sort of see them reversing course?
Yeah, just to piggyback off what James said, is that of course they don't tell anybody, but now that all this money printing has come about and people see the prices go up, like, hey, what the hell's going on? Like even my mom asked me a couple of weeks ago, what do you think about this inflation? No one's, I mean, in years past, no one really cared about that because they just thought inflation is just a normal thing. And now we see these rates, if you believe 8.5%, no, James and Ben do not, but it just keeps going up. So I think that as time goes on and they start to see these rates go up, they're like, what really is my money doing? Where do I put my money? Why is it that my money doesn't buy near as much as I used to? So I think it's just going to keep going on like that. Hopefully people get educated, and it's a great billboard for Bitcoin and crypto. But the one thing that does concern me is that Jerome Powell, and I know we believe that he can't increase these rates too much or it collapses everything. But in the last meeting that he had, or it was at the Fed Reserve, the Volcker Alliance special briefing in Penn, and he just said, look, he started out with this: Volcker left a strong legacy. He embodied the spirit of public service, keeping the core principle and mission at the center of his work. And Paul Volcker is the one that raised rates to 20%, as the inflation rate was back then 14%. And that was what they said it was, not what it could potentially be. So I know that the politicians, they put him in place, or they nominate the Fed chair. But I wonder if he just takes his job and says, you know what, maybe if we have to put the economy and cool everything down, we'll do that because it's the lesser of two evils besides the collapse. That's the thing that I'm worried about, but we'll see. But again, in the long run, I think, where else are you going to put your money? Let's be truthful. You can't put it too many places before it just deflates away.
Right. I mean, that's part of the issue, I think, with just keeping it in fiat for too long is that it's going to lose value. At least by putting it somewhere, there's a chance that it might actually go up in value. So I think we've reached the point where we want to field questions from the audience. So if you guys have a question for Robs or James or myself, feel free to go ahead and ask that question, and we'll try to get those answered. Looks like, let me see if there's any questions already. Some people are talking about, will Bitcoin be an inflation hedge? So yeah, maybe that's a topic too, because a lot of people talk about Bitcoin being an inflation hedge, and it kind of it went up, and then inflation started to get higher, but then inflation got to the point where the CPI print was so excessive that then I think market participants were like, well, crap, now the Fed's going to do something about it, so now we have to go to risk off. But I guess the problem is what happens if the Fed does something about it, but then we realize it has no effect? Do then people kind of go back to Bitcoin? James, what do you think?
Well, that's a great point. And I go back to Rob, your grandma. I don't know her personally.
No, my mom.
Oh, your mom, sorry.
Yeah.
When people start asking that type of question, the next question is, what's the hedge? 3 choices. 1, you get priced out of the market, real estate's all cash buyers. Number 2, it's gold. But like with 20% purchasing power debasement, gold doesn't go up 20% per year. You need something that really has much more alpha than that. So what's happening now, I'm hearing a lot of reports that people that have a lot of money, they're really looking for that hedge right now. They're sitting on a third of their net worth in a bank account. They're losing 2% of value a month. They've done the calculations. So you got 5 million in the bank, you're losing 2%. They're like, holy crap, that's a lot of Airbnbs. That's a couple of yacht charters. They're doing this math in their head. They're saying, we got to fix this fast. And they're already all in on equities, all in on real estate. But what do they do with their cash balance? And once that market comes over, we just need the narrative to be there. The narrative has not worked because the numbers haven't worked, because the price has been a little bit, manipulated, suppressed.
Yeah.
But as far as I'm concerned, there's only one hard asset in this planet. And I've looked, and that's Bitcoin. So,
You know what, real quick, Ben? So think of it this way. Like you said, like what could be a risk on, risk off as we go forward? Just to piggyback on James, what if, God forbid, or God help us, the SEC comes out and says, you know what, we're going to approve this spot ETF. And then they come out and say, okay, we're going to give some regulatory clarity as to what is a commodity, a currency, a security, and go from there. If that happened, I think that would allow all these different institutions that we know are on the sidelines going, you know what, I have no place, I can't really do it because the charter won't allow me to do it, or the regulators won't allow me to do it, just to go, okay, finally, we've got it and we can go in there. Maybe that's one of the big reasons why, hey, we're just not going to allow that to happen, because if it does, it slips from all our people that we know over here into this weird, crazy space called crypto. We don't want that to happen yet.
I think that's, you hit the nail on the head though. I think that regulation, or getting past those hurdles of the uncertainty about what the regulation is, I feel like that's probably the next bull market is after we get that cleared away. I think this most recent one was, for a lot of reasons, right? All the money printing and a hedge against inflation from all the money printing. But then the next one, I have to imagine at some point you're going to see this bigger pockets, deeper pockets come into the space, and I think that will probably lead us to the next bull market, whenever that is. And I don't know when. It's like, when is the spot ETF going to come? A lot of us were told it was going to be here in 2018. Here we are in 2022, and it's still not here. So hopefully in a few months, right? That's what we keep thinking.
Yeah, it's coming. Inevitably, it'll come. And when it comes, it'll be a tsunami, I think.
Yeah, I would agree. I think once it's here, you have your next bull market. So, James, we have a question for you. NPZ is asking, can you ask James his snipe targets on his favorite equities?
Yeah, well, if I wasn't on this stream, I would have just bought Google under 2,400, but I don't have my setup here at all, so I can't even get it unless I want to do it on my phone.
So there's an opportunity. There's an opportunity cost for you to be here right now. So
absolutely, I was going to short Amazon at 3,300, and I was on a similar type of Zoom call on the Thursday a few weeks ago, and it would have just been perfect. And I just missed the opportunity. I said, "Oh, I'll wait. I'll get back in," and I never came back to that level. And now Amazon's at 2,900, so it's a 400-point swing real fast. There's so much, like Shopify at this level too is scary cheap. I think Shopify went down to 450 today. I think that it is a great long-term future. That's easily $1,000 stock. You guys know I love Tesla, but Tesla, after crazy earnings, people are just beginning to do the arithmetic in their heads about how cheap Tesla is. Their gross margins of 19.6% is just mind-boggling. The next best car company on earth is BMW at 10%, and they're only ramping up. So, everybody just needs some Tesla. As I mentioned, this is a guaranteed 10x over the next 8 years. Just buy some of these good names and just money machines. Again, I always refer to the black holes, but I don't want to give any financial advice online. But everything else is holding up. In fact, ever since we started the stream, the S&P 500 has rebounded, and so has Bitcoin by $350.
Great.
So
that's all us.
Yeah, it's just the juju from you guys. So
that's good. Good news for the day.
Yeah.
All right, let's see some more questions. If the NASDAQ dumps because there's no liquidity in the markets, do you think that crypto is over until 2024?
That's kind of pushing it. 2024. That's a long ways out.
It's interesting because even in 2019, which was after, I mean, we had 2017, which was crazy, 2018, which was a bear market. There was a lot of money made in 2019. I mean, Bitcoin went up 4x at one point.
Yeah.
A lot of cryptocurrencies went up a lot. In 2020 and mid 2020, we had DeFi going crazy. It was sort of preceding everything. So I wouldn't say that anything is necessarily dead. I think there's a lot of money to be made. Remember, a 4x is still a lot of money. Even a 2x is a lot. We just get spoiled in bull markets when everything goes up like 50% in a week, and then in bear markets we learn better investing habits. I think. What do you guys think? I mean, if the Nasdaq dumps, what do you see that doing with crypto?
Well, first of all, first lesson for everybody out there: there's always money to be made, whether the market's flat, up, down. You can make money everywhere. There's always going to be something that's oversold that's going to rebound. Look at Luna at 75 a few days ago, and now it's 95. So that's just a big move. Those things can be snagged all the time. Second of all, you got to realize there is so much money out there, and this is the bigger part of my thesis. And I don't want to sound like a perma bull, but I just know that $30 trillion is looking to find a home. It's just a tiny slither that makes it into crypto. We go crazy. And there's nowhere to put money. The bond market's toast. There was a huge place for people to park money in their 60-40 portfolios, where 40% of their assets are in bonds. It's gone. Yeah. Now they need to find a new home. And that's why you see things like with such huge relative strength like Tesla and others, because everybody's saying, okay, well, I don't know where to put this money, but I know Tesla's safe. They don't quite have the on-ramp yet for Bitcoin. They've probably never heard of MicroStrategy. There's no Bitcoin ETF. GBTC is confusing them because of a 25% discount. So there's a lot of that confusion. We're still so early. And that's the other reason why I'm so excited. A lot of money, crappy backdrop, but promotes Bitcoin and crypto. A lot of disruptions coming. Just be patient, everybody. Pick your targets and hold tight.
Yeah, I agree. And just like in marketing, people got to see a message 7 to 9 times before they actually buy it. That's why, on all our channels, we tend to talk about a little bit of the news about who's getting into it, the next billionaire, the next person. It's not that I really care so much about what they say, but it's important for the people that have the most amount of money, which is, let's just be honest, is the boomers in the United States. And those people have to see other people who they trust and know before they say, you know what, I'm going to do that. So it's going to take the Ray Dalios and the Bill Millers and all the different, and the Paul Tudor Jones for them to go, you know what, I heard it was a scam before, and I heard it was an activity. Now I see these guys getting into it. I'm going to get into it. And then hopefully it's just a narrative that will, of course, bring us to hopefully the next big bull run.
I mean, I meet a lot of people that are, around my age, and I feel like the majority of them don't hold crypto. That's just my own personal experience. And when I tell them what I do, and I know that I speculate dubiously on crypto markets, they look at me a little weird. I think a lot of them, to some degree, I think we live in a bubble. No pun intended, right? Like, we live in a bubble in the sense that, like, it feels like everyone's in crypto because everyone we talk with online and all, is in crypto. But then you actually go down the street and you meet people. A lot of them don't have crypto, or they don't even know how to buy it. So I think it's a great point. I think they're waiting for, a little bit more clarity. Once they see other people doing it, then maybe they'll do it too.
Yeah, that's a point I just want to double click on that Rob mentioned. And thank you for bringing that up, Rob. 68 trillion over the next 6 to 8 years is going to be transferred to millennials, plus or minus the upper or lower age bracket. 68 trillion. If they put just 1% of that money into Bitcoin, just the only people on earth to invest in Bitcoin, the increase in Bitcoin price will go straight to $100,000. Just 1%. If they put 5%, it goes straight to $250,000. So we ran the numbers on that, and that's just basically what's going to happen. That excludes everybody else. Again, it's so scarce, it's so rare, so much is lost, and it's just a timing game. It will explode upwards. We just don't know when. That's the big message for the audience today.
So I think we're going to do one more question, and then we'll let you guys go. The last question is concerning the dollar, DXY, U.S. Dollar Currency Index. Obviously, it's weighted against a basket of other currencies that we know are trending towards zero. Doesn't change the fact that the dollar was strong in 2014 and 2018, and Bitcoin was weak in 2014 and 2018. The dollar has been strong in the second half of 2021 and so far in the first half of, or at least the first 4 months of 2022. So we could draw the relationship to say, look, the dollar trending higher is not good for Bitcoin, historically speaking. So then the question that was asked in the chat is, well, where is it going to reverse course? For reference, we're currently at 101. The top that we hit in 2020 in March was 103, just below 103. And then in 2016, before the 2017 bull market, we hit around 103.5. So I think, what do you think with regards to DXY? Is it gonna top out, maybe a little bit higher from where we currently are, or do you think it's gonna go a lot higher?
I think it has to top out like only 4 or 5 times in history, in Bitcoin's history, not history, Bitcoin's history, has the Dixie been this high. And typically it runs counter-cyclical. So basically, a simple way to think about it is every time Dixie rallies, then it stalls.
Yeah.
And then as soon as it starts to fall, Bitcoin rallies. We are right at that point. So if history repeats the last 4 or 5 times in a row, it's time for a Bitcoin rally. Also, you can see what happens with Bitcoin when the Dixie is very strong like this, is the volume tails off as well. So watch the combination of the volume and watch the counter-cyclical nature of the Dixie and Bitcoin. It's fascinating.
Okay. Rob, you have anything to add?
That was good. Good takeaway. I don't really follow the Dixie as much as James and you guys do. I seen your video on it, Ben. It's interesting, but again, we'll just see how it goes. No opinion either way.
All right, fair enough. Well, I think we will go ahead and wrap it up there. We'll give James a chance to go snipe some of these assets before the market closes here. The opportunity cost is high. So thank you guys for tuning in. Remember to go subscribe to James and Rob's channel if you're not already subscribed. I think we'll be on James's channel next Friday for the next edition of DCA. So thank you guys. I'll see you guys next time.